For more about Alibaba's possible being listed in America, we're now joined by CCTV America's Jim Spellman, live from Washington, D.C. Well, Jim, Chinese e-commerce giant Alibaba has just filed its long-awaited share sale. What will happen from here?
So here's how it works. The process began yesterday when Alibaba filed the registration statement with the U.S. government. They've partnered with a handful of big investment banks, Credit Suisse, JP Morgan, Goldman Sachs, and they will take this, work with the U.S. government to get the basics of the deal approved. The U.S. government will look at their business model, their risks, etc., and in all likelihood give them the go-ahead. Then these investment banks, along with people from Alibaba, will take it on what they call a roadshow, and then will go around to institutional investors, the kind of brokers who buy stocks for big mutual funds that are in millions of Americans, retirement accounts, big brokerages like that, and they will try to sell it to these people, and that through that process they will come up with a price. Meantime, they will be working on deciding whether to be on the New York Stock Exchange or NASDAQ. All of this will lead up to answering some of the big questions that remain about this IPO. How many stocks will they offer? What will the share price be in that initial offering? What exchange it will be on, and even what the ticker symbol will be.
And Jim, I presume not a lot of Americans know what Alibaba is. So are banks optimistic about the $1 billion IPO?
Yeah, Americans don't have to know what Alibaba is because these investors certainly do. That $1 billion figure is really just a placeholder that helps determine some of the fees that the SEC, the part of the United States government that deals with these things, will charge them. Actually, they think this will be much, much higher, in the $15 to $20 billion range. To give that some perspective, the Facebook IPO raised about $16 billion, and the biggest IPO ever, Visa, the credit card giant, back in 2008, was about $17 billion. They think the Alibaba IPO could surpass both of those.
So this is even bigger than Facebook and Twitter. How do market watchers view this move? Could this spell maybe another technology market boom?
You know, it could really spark a boom here, because what you have in China is you have the fastest growing tech company in the fastest growing economy in the world. There's so much growth potential as the Chinese economy grows, as the middle class grows, and as the demand as consumers grows within China. So certainly no sort of peak here. Will this start a boom? I mean, I think that really what has to happen here is some of the risks involved in Alibaba have to be assessed, and I think that will really determine the next phase, going beyond the IPO. Essentially, you're going to have a company that is using the American model of stock exchange and this IPO, but it's a company that operates under Chinese law. So you're going to have some potential conflicts there, how they're taxed and how they're regulated. Those will be the things I think that will mitigate long-term growth for Alibaba.
Well, it will be interesting to see how it play out. Thank you, Jim, for your reporting from DC.